Ahoy, cruise enthusiasts! All right, let's talk about the super fascinating world of corporate domiciles, tax code, tax treaties, and of course, everyone's favorite topic, gratuities. So I decided to do a little bit of digging on this particular topic, the question of whether or not there's a tax advantage to the cruise lines collecting and redistributing the gratuities as a separate line item has come up a few times. I have brought it up a few times myself, and I thought, you know what, let's spend some time with our favorite AI chatbots and try and figure this out. And pro tip, if you do decide to do this with any of them, make sure you use at least two, because they don't always agree and they get very confused. At one point, Grok insisted that MSC was based in the Bahamas. They are not. So yeah, he finally came around, but you gotta poke them a little bit. So here is what I've learned about the tax situation of gratuities with the major cruise lines. And very important, stick to the end, because I think I have figured out what's going on with Virgin Voyages. Yes, it's going to get very, very interesting. So here we go. The cruise lines, we all know that they are not based in the United States, that they have their corporate domiciles in a number of different foreign, or at least the major cruise lines are technically domiciled in foreign countries. So Carnival is based in Panama, Royal Caribbean is based in Liberia, and Norwegian Cruise Line Holdings is based in Bermuda. Right? So this is important because none of these jurisdictions tax corporate income earned outside of the country, right? Well, technically Bermuda doesn't have income tax, so it doesn't really matter. But Panama and Liberia, they only tax corporations on money they earn within the boundaries. I suppose this does create an interesting situation for Carnival if one of their ships is sailing through the canal, but fine, they'll just file a return with the $10,000 of spend they make on that one trip and deal with it. It's no more than a rounding error. So yes, that's why they are based outside of the United States in order, or even European countries, to avoid taxes. How can they be headquartered here and still avoid U.S. taxes? Very, very simple. Section 883 of the Internal Revenue Service Code, titled Exclusion of Income of Foreign Corporations for International Operation of Ship or Aircraft. And it specifically excludes from reporting income from things like fares, operations, onboard spend, and gratuities, and a few other things. So pretty much every bit of money the cruise line collects in terms of the actual cruise operations, they can not report to the IRS, provided there is a tax treaty between the United States and their domicile, which there is, and they meet a number of reporting requirements and or are publicly traded. They are New York Stock Exchange and meet a number of other reporting requirements, which they all do. So under Section 883, they do not have to report the vast majority of their income for U.S. tax purposes. So that's how they get around that. And because their actual corporate domiciles, Panama, Liberia, Bermuda, do not charge corporate tax, it actually doesn't matter how they handle gratuities. They can collect it and distribute it. They can just roll it into the fare, raise the fare and roll it in. It doesn't really matter. Since they have no tax liability, it doesn't matter how they handle the gratuities, right? So that was very interesting to learn. So at least for the vast majority of operations from Carnival, Royal Caribbean, and Norwegian, it doesn't matter. They just do gratuities, I guess, out of for historical reasons, or just because that's the way it's always been. Okay, which means yes, they're the ones that could most easily not do this. But we'll talk more a little bit later about why they might not do this. Anyway, so just as an aside, for the other three cruise lines, there is a slight difference in how gratuities are handled and whether or not they are passed through or collectively received. constructively received. Pass through means the exact amount that the guest leaves is handled directly to a crew member, such you would do in a restaurant by handing over the $20, or if the entire tip amount on your credit card receipt went to your server and your server alone. However, this is unfortunately not the case. Well, actually, it's just not the case, unfortunate or unfortunate. The way the cruise lines handle it and the way most restaurants handle it, the gratuities are constructively received because they are pooled and distributed. So this has a consequence of requiring them to actually report the cash flow or overall revenue, which includes the amount received as gratuities, even though it is later simply deducted as an employment expense although perhaps not necessarily a payroll expense, but an employment expense, thus creating no tax liability on part of the corporation. So this is how they avoid taxes on, so this is how these 3 cruise lines, MSC, Disney, and Virgin, avoid paying taxes on the gratuity income by receiving it, pooling it, and distributing it. It's not technically counted as corporate income. MSC is a Swiss corporation, so they also have a tax treaty with the United States, so all of their U.S.-based revenue is also subject to the 883 exemption, which is why they have a significant, or will have a very significant presence here in Miami, but will face no U.S. tax liability. So, but it's still under Swiss law, and it seems under every Western economy, even though gratuities are not as huge a thing, they all do recognize the difference between gratuities and corporate income. So even in the UK, this is even in the UK, and this affects Disney. Gratuity income is still exempt from corporate income, and thus creating no tax liability. And of course, here that is definitely the case, and that affects primarily Virgin Voyages, or will affect Virgin Voyages coming up. So, yeah, for the big 3, no tax liability jurisdictions. Doesn't matter how they handle gratuities. For the other 3, MSC, Disney, and Virgin Voyages, because they are domiciled in income tax locations, it is very important how they handle the gratuities, and it is also very important that they are voluntary. They have to give you a way to make it voluntary by removing them. Otherwise, they are treated as mandatory and would be considered income to the corporation. And once it's income to the corporation, it is taxable. So that is how things like international tax treaty, corporate domicile, and the IRS code mean that the different cruise corporations have to treat gratuities very, very differently, and why it is so important for MSC, Disney, and Virgin Voyages. There is, however, an interesting wrinkle to this. Because the big 3, Carnival, Royal, and Norwegian, are publicly traded, they do have to make SEC filings. And because this is constructively received revenue, they actually do have to report all of the gratuity money that they receive on their SEC filings. And I imagine it is, global, worldwide gratuity revenue. So they do have to report this. However, it seems they actually don't have to report the amount of that gratuity revenue that they spend, because there is no, okay, how is this explained? There is no requirement to match up revenue sources to expenses. So they have taken the very safe route and reported all of the gratuity revenue. However, they only need to report the total employee expense. They don't need to match up how that total employee expense is made up. So theoretically, they could report the gratuity income and not distribute it, unless it is a material difference to margins and or segment performance. Okay, interpret that as you will, but it might come down to if everybody's not doing it, or if everybody's doing it, maybe it doesn't matter. Or whether it's like 5% of global revenue or something like that. So yes, the definition of material, it's not one hard number, but I think they know what the regulators might think. Or, and this is actually very, very important, they have made public claims about how certain revenue sources are used, including gratuities. So what does this mean for cruising? Well, Carnival distributes all of the gratuity money 100% for sure, no doubt, because John Heald has on a number of occasions insisted through official channels that Carnival does distribute all of the gratuity money to the crew. And I will just repeat again, it technically costs the money to do this, because they do have to run it through all the financing and everything like that. But yes, Carnival does distribute this because John Heald has said so. He has said this many times, and the corporation has made zero effort to correct this. So they made that public statement, which means they're kind of stuck with it. Well, at least for this year, I suppose they're kind of stuck with it. So yes. However, oddly, none of our AI bot friends can find any instance of Royal Caribbean or Norwegian making the same claim. Not in their filings, any public statements that I've ever heard. If you have, by the way, let us know. Has Norwegian or Royal made the same statements? Yeah. Comment once you subscribe down below. I'd be very curious to know. So I suppose theoretically they could skim a little off the top, and they would be fully compliant. I'm not saying they do this. I'm not saying they do this. They don't. It would be way, way too big of a scandal if this were ever found out. And it would be bad, like PR-wise, employee-wise, and everything like that. And it's probably just not worth it to them. So they collect and they distribute, and that's fine. So, everybody talks about transparency. And I think, again, cruise lines, what people just really want to know is how is it distributed? Like, who gets what? Like, how much does the stateroom attendant get? How much does the dining room get? How much does the buffet get? How much does the laundry get? Things like that. And people also want to be assured that the money actually does go to the crew, which means, Carnival. So Carnival's taken care of, right? They put themselves under regulatory scrutiny, by saying it. So maybe Royal, Norwegian, maybe just like, put out a tweet on X, yes, all our gratuity money goes to the crew, and there you go. Everybody can be assured that the full weight of the SEC, different conversation, will be watching that all the money is distributed. So there you go. But I guess technically right now, they could they could play with the books a little bit and technically still be compliant. But anyway, however, this does bring up a very interesting point about how the crew is actually paid. And this is where I think a lot of people are very suspicious of how the gratuity money is handled. Like I said, they get 100%. For all the major cruise lines, they do. But what does that actually mean? Because at least here in North America, we consider, even though we know that there are tipped positions with like very, very low minimum wages, but here in North America, our assumption is that the money goes to the person providing you the service, and if you tip very well, or if a bunch of people tip very well, they're going to get extra money. Like a lot of extra money. Like that server, she performs awesomely that night, and everyone, throws down, a bunch of 20s that she's going to walk home with a pocket full of cash that hopefully she will not report, but that's another completely different video. And right, so she actually gets the benefit of that. And I don't know that that's true for the cruise lines. I remember seeing a number of different cases of either crew intimating this, suggesting this, and there was a video a few years ago from one of those ambulance chasing cruise ship lawyers that talked about the minimum crew amount, the minimum pay, the minimum guarantee, or something like that. That if a crew does not receive for whatever reason like a certain amount of gratuities, the cruise line will cover it. So here's my take on this. I would not be surprised to learn that the cruise lines have gotten so good at predicting gratuity revenue from on the ship, the season, the market, the port, everything like that, that they know exactly, probably down to the nickel, how much gratuity revenue is going to be collected and how much they have distributed to the crew. And when they sign that contract with the crew, that base pay, the guaranteed pay amount, is the corporate contribution, right, plus the gratuities equals their base amount, which means that the difference, the extra the crew might get for performing awesomely, and everybody, let's say everybody leaves their autograts on, the difference might just be a few dollars on the paycheck, because the cruise line knows exactly what they're going to collect, and that's just part of their base pay. So in a way, it doesn't really make a difference. It's like only that last dollar you pay. Say we pay like $20 a day, only that last 50 cents might make a difference to the crew and to all the crew, which means, if everybody leaves their grats on, they get maybe a few dollars in their pay. So their pay is literally, the same every pay period, regardless of what the guest does. That's my assumption. It's not enough of a difference to make a real difference. And that cruise lines, that's kind of where people don't trust you. That's generally my summation of this whole thing. So yeah, that's what we want to know. That's why I said I just leave the autograts on, because it's all rolled up into their compensation, and that's just what they're going to get paid no matter what. Like, even if they just make their minimum. And the option for us is, if let's say if everybody collectively just decided to say nope, start removing gratuities, the cruise lines would just like instantly raise fares to make up for it. So whether we pay it through gratuities, and yes, you can see me do air quotes. I say this in the vlog all the time, or on conference calls all the time. So whether the cruise lines do it through gratuities, or they just raise the fare and pass it on to the employee or the crew member. It doesn't really matter. It honestly, for the big three, because there's literally no tax or accounting liability for them, that's what they're going to do. So there you go. That's why I just leave it in whatever, because that's what everyone expects. So Virgin Voyages. This is getting very, very interesting. So everybody, I presume, knows that Virgin Voyages made a huge decision recently to start charging gratuities. It's going to appear as a separate line item when you book the cruise, and you can either prepay it or pay it on board as a voluntary, right, gratuity. And if I forgot to mention, at least in the US and the UK, yes, it has to be voluntary. It has to be voluntary for the corporation to not have a tax liability. So why would they be doing this now? I know, it's very strange. After, what's it been, 4 or 5 years of very successful growth, now they're finally deciding to charge voluntary gratuities. Okay, well, a little bit of history on Virgin Voyages. They are actually a joint venture. They started off as a joint venture between Bain Capital, yes, that Bain Capital, and the Virgin Group. And while the specific ownership structure is not known, it is widely reported, and they've, again, made no effort to change this, that Bain has a majority hold on the company. I couldn't, whether it's 51%, 60%, 75%, doesn't really matter. So technically, up until recently, Virgin has been responsible to pay taxes on their full cruise fare, right? Because they don't charge gratuities. So whatever fare they collect from us, goes straight to the top line, and then minus all their expenses, and then they pay U.S. taxes on their profits, right? It's paid on net income. And as a U.S. corporation, they're responsible for U.S. taxes. They were never able to claim the benefit of tax-free gratuity income because they did not separate it and it was not voluntary. So why are they doing this now? Okay, very simple. I think it's because they just started to make money recently, maybe a few months ago, maybe now, or maybe they are projected to actually make money starting October 6th, or actually, 2 days ago. I don't know when this, whenever October 6th was. And if they are just starting to make money and their net income is relatively small, that $20 a day deducted from their taxable income could be huge, right? They are a U.S. corporation, and that means if they're just starting to be profitable, that could make a huge difference in whether or not they actually show a profit as a business or not, which means I think they're getting ready to be spun off as an independent entity. Why else would you need to make this huge cultural shift in the company that really has no benefit for anybody other than to be able to show a profit, right? I think Bain is right now shopping them around, and they want to be able to show consistent profits, and an easy way of boosting their non-taxable income, right, so they can show a better profit, is to start charging voluntary gratuities to the guests, because that lops off, $20 a day, $20 per day per guest, off their taxable income. And that could be a lot, especially if, that taxable income is like this big. Yeah. So that's what I think is going on. And you might ask though, why would they not just have incorporated in Bermuda originally and avoided this? Being a joint venture between the US and the UK, like Bermuda would be perfect. Probably because Bain is used to setting up companies in the US, so it was very easy for them. They already knew how to do it, right? They have people on staff, lawyers, accountants, finance people that knew how to set up a US corporation, and they just didn't want to bother to learn how to set up a foreign corporation like that and set up the domicile in Bermuda and the actual headquarters here. It was just too complicated, and until recently, if they weren't making any money, if they were operating at a loss, then the tax implications didn't really mean anything. Yeah, so it didn't really matter if the gratuity income was exempted or not. If they're losing money, they're not paying taxes. So it didn't matter until now. That's why it only matters now that they are making money or are about to make money. That's why they made this change, and I think it's because they're getting ready to be sold off. They want to be able to sell off a profitable operation. Now, who knows? The new owners, and maybe they'll reincorporate in Bermuda, and we will get our all-inclusive fare back. Who knows? But yeah, that's my best deduction as for what's going on with Virgin. So I guess there you go. Okay, yes. What did we learn? We learned that foreignly domiciled corporations in Panama, Liberia, and Bermuda are not subject to corporate income tax, so how they handle gratuities does not really matter. We learned that the shipping or the cruise line revenue for all the major cruise lines, the foreign corporations is exempt from U.S. taxes under Section 883. We learned that MSC, Disney, and Virgin are responsible for paying taxes on their revenue, which is why handling gratuities as voluntary actually does give them a tax incentive to treat them as voluntary. And I think we also learned what's going on in the near term for Virgin Voyages, which may end up being its own cruise company very, very soon. So there you go. That is my little deep dive into all of this. And okay, awesome. Well, if you booked a Virgin cruise recently to avoid paying the gratuities, well, you got there better sooner than me, because I didn't. I thought about it, but I thought about it, then I forgot about it. I know, I should do better, which I'm trying. So I hope you enjoyed this video. If you have any comments, please leave them down below. If you are in finance or accounting or anything like that, definitely down below after you subscribe, let us know what the skinny is. Did I get anything wrong? Are my assumptions incorrect? I really, really want to know, because I'm not one of these weirdo lefties on X that cannot handle the slightest bit of criticism. Seriously. Okay, well, if you booked a Virgin cruise, and I happen to book a Virgin cruise so I can not remove the gratuities, then I'll see you on board.